Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean we actively covering our positions in multiple asset classes. By multi-asset, multinational, I mean we actively covering at various locations. But like I repeated many times, and I would continue to repeat all the times that we are a proprietary hedge fund. By proprietary, I mean to say no third party. Let me repeat, no third party can invest capital in our funds. Please take a note of that. Very often, people ask me that how do you select a penny stock? So I thought let me make a video of that. How do you can select a penny stock? Now, first of all, we need to understand that what do you mean by penny stock? Strictly speaking, in the country like India, where financial market can easily be manipulated, and history is witness that even the big hedge funds, financial institutions, private equity, banks, brokers, there is hardly anyone who not exploited the financial market. In the country like India, there are three kind of stocks. Number one, I say the darling of FII. Now, the darling of FII are those stocks, they may have some fundamental or they might not have some fundamental. I don't want to name few stocks, few IT companies, but around a year ago, you can say we saw a substantial rise in few mid-tier IT companies. And I was like, what the hell? Okay, you are an IT company, you are a profitable company, you have a cash in your balance sheet. I agree, but that doesn't mean your share price would be in 4 digits. That doesn't mean that. I was like, what's going on? Straight away, 1 year down the line, these IT companies are around 50%, in some cases 60% down. The same IT companies. Now, they are called the darling of FII. Now, when I say use the word darling, it means they have the double side impact. Now, double side impact means the day FII wants, they will pull the stock without any reasoning. And the day they want, they will take the stock down. History is witness that in the countries like India, there are many stocks who pulled up without any substantial reason and they pulled down without any substantial reason. But the unfortunate part is that millions of investors fell in that trap almost every possible day. The second kind of stocks in India is having the government companies. I don't know why Indian investors ignore government companies, because probably with complete respect, they do not know how to study the balance sheet. India is a country where knowledge is always a big issue as far as the capital market is concerned. The reason being is I haven't seen a single investor on the so-called business channels who speaks about balance sheet, who speaks about intrinsic value, who speaks about the volatility, who speaks about the strength or the resilience of the balance sheet. Everyone on the business channels speak about the M&A, this FII invested, this investor investing, forget the fundamental and the resilience of the balance sheet. In India, we have many government companies who are extremely resilient. I think extremely resilient is the only word I can use. If I would have better word, I would have used that, because ONGC, Oil and Natural Gas Commission, Indian Oil Corporation, look at the balance sheet of these companies. You feel like, guys, Indian Oil Corporation balance sheet and the stock is at whatever price, they really don't deserve that. Now, I don't wanted to say that once you listen this video you buy IOC stock. I'm not telling you to buy that. I'm telling you the strength of the balance sheet. Please take a note of that. There are many public sector concerns in India we do hold, whereby the balance sheet strength is very good, resilience level is very good. Unfortunately, we have many public sector concerns also where the resilience is very poor as well, the loss making public sector concern. But we are not bound, or we are not compels that we're going to be buying the loss making companies. You have to know how to check the resilience of the balance sheet. The third definitely is those stocks who barely get the, I would say, limelight which they deserve. Now here I don't wanted to quote few stocks, but we have few renewable stocks in India, at least a couple of renewable stocks I know, that whereby the balance sheet of these renewable stocks are very good. I downloaded the annual report from their websites. I thoroughly been through the annual report, and I was like, what the hell? Very, very resilient balance sheet. Of course, your balance sheet is not like ONGC or probably Reliance or maybe Indian Oil Corporation, but whatever your balance sheet is, it speaks. That's more important. Like, everyone cannot end up being Bill Gates. Everyone cannot end up being Warren Buffett. But even if you reach at a good stat that considered a very designated place in your life. Penny stocks are majority in third category. Majority. Now, penny stocks are of three types in India. Number one are the fake penny stocks. Fake penny stocks are those penny stocks who are hyped by Indian media, but if you look at the balance sheet, you will feel like, what the hell? Some forensic audit is going on this company. Probably this company did some fraud, some scandal, probably the turnover of this company is in few lakh rupees, but the stock is like, oh my goodness. Second kind of penny stocks are those stocks who are good stocks, I would say, but unfortunately the resilience of their balance sheets are not coming up in public. And that's a big concern and would continue to be, because in India, you need a big support of the media. Let me give you an example. Like today, 19th January 2023, Vijay Shekhar Sharma made a statement that Paytm would be profitable by coming September. So as we speak, we are in January, and he's saying that Paytm would be profitable by coming September. Currently, he's in Davos. Davos means Switzerland. You know that the annual Davos, forum is going on, and I fail to understand what is the outcome of that, but Vijay Shekhar Sharma said Paytm would be profitable by September 2023. And this statement he repeated many times in the past also. And we know the profitability of the Paytm, but the media highlighted this. But the media not highlighted that there is 15,200 crores. You heard me very right. 15,200 crores worth of negative retained earnings in the books of Paytm. Media not highlighted that PwC, PricewaterhouseCoopers, is the statutory auditor of Paytm. Please open Google, check the background of PwC. Media Note highlighted many issues about Paytm balance sheet, but the issue which media highlighted definitely is Paytm would be profitable by September 2023. You yourself know what would be Paytm at that period, and I'm sure that none of the media representative is going to be asking question from the Paytm. You said it would be profitable by September 2023. Today is October 2023. Where the hell is profitability? No one is going to be asking this question. Take a note of that. Now, the point is the second category of stocks fall in the same category. They never get the limelight they deserve. Like the two renewable stocks I talked about, and I'm not going to be mentioning the name in public. Let me assure you that they are falling in this category. The third is companies with a very strong business model, no doubt about that. The kind of business the company is up to is really strong, no doubt about that. But unfortunately, due to capital constraint, due to the focus of the current management, due to, I would say, the issues with the organization, these stocks are available in 50 paisa, 1 rupee, 2 rupee, or probably 3 rupee as well. But before judging this stock of 1 rupee, 2 rupee, we need to look at the balance sheet. And fortunately, the balance sheet is very strong, no doubt. But unfortunately, there are several mechanical reasons with these stocks. Henceforth, they are considered in India as speculative. People speculate on these stocks, and most of the time they lose in these stocks. I predominantly feel that whenever someone is investing in penny stock, he should look at the resilience of the balance sheet. That's very important. Because if the balance sheet is resilient, if the business model the company is up to, and that business model is strong, and even though the balance sheet is small, of course, everyone cannot be ONGC and IOC, but the balance sheet is good, then this stock deserves a buy rating. I always choose penny stock based upon the resilience of the balance sheet. That's the only factor I am taking. To me, it hardly matters whether media hyping this or do not hyping this. To me, it hardly matters whether any brokerage firm like JP Morgan, Goldman Sachs, Credit Suisse, UBS and all giving any buy rating to them, Mercury. To me, it hardly matters whether the analysts who are coming up on the TV shows daily basis speak about them or not. To me, what matters is the resilience, because I have seen one thing is that if your stock holds resilience, you are bound to win. Of course, it may take some time. Probably you need to wait for a few months, and sometimes you need to wait for a couple of years as well, but you are bound to win. On the contrary, if your stock don't have resilience, but it is like a balloon who is filled with gas, just like we have seen a couple of IT companies in India, without quoting any name, whom stocks are approximately 50% down, then you are bound to lose also. Take a note of that. Henceforth, to me, we really need to understand before we invest in penny stock is that media hype should not be considered, number one. Secondly, we should ignore the talks which are happening on the business media because they will never speak about that. Third thing, we should have technical competence, I would say. We should have technical competence to learn the resilience of the balance sheet. The day we would be learning that, we're going to winning that. That's what I can say. And this is what I really wish to say, because I believe that penny stocks are always a great opportunity. I have seen the stocks even touched 100% of their value. Like, without quoting any specific name, a stock used to be at whatever price, and around 6 to 7 months it become double. In many cases I have seen it become treble also, because the balance sheet of that organization is resilient. That's more important. And I have seen the loss making startups also, whereby stock crashed by more than 60 to 70%. 60 to 70%. Kindly check Nika. Don't consider the bonus issue in pricing. Check Nika, Paytm, Zomato, Delivery, Policy Bazaar, Card Trade. You get to know what I wanted to say. Resilience in the balance sheet is the most important factor. Read with the time the investor can have. Don't expect penny stock to give you benefits in a couple of months or probably a quarter. They take 6 months, 7 months, sometimes 8 months, sometimes year, sometimes couple of years to reap you the benefit. Because in the countries like India, when the media is busy giving hyping to few selective stocks, they get less time to talk about the stocks having strong balance sheet. I hope I answer all of your questions. But remember, guys, my all deliberations on YouTube are always about knowledge. To me, it makes no sense how many subscriber, how many views, how many counts, how many dislikes I have. I even never bother. To me, it hardly makes any sense. I never bother about this. I always speaks about knowledge, and I would continue to speak about knowledge. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, +91 9899 242 978. +91 9899 242 978. Alternatively, in case you wish to have more information, you can visit our fixed income platform www.fixedincome.global. www.fixedincome.global. Thank you.